Mara Holdings Inc. is currently trading at exactly 11.87 USD, seeing a significant intraday surge of 0.76 USD, which translates to a robust 6.84% gain so far in today's session. The market is alive, and the ticker is flashing green, signaling a moment of intense interest that goes far beyond a simple daily fluctuation. While the broader Nasdaq might be navigating its own currents, Mara is carving out a very specific, aggressive trajectory right now. Most investors look at this chart and see a Bitcoin miner catching a bid, assuming this is just another high beta play on cryptocurrency prices. That is the expectation, that Mara is merely a levered bet on the price of the coin it mines. But the reality is far more complex and significantly more interesting. What we are witnessing is not just a miner responding to spot prices. We are watching a company that is fundamentally repricing itself as a digital infrastructure sovereign, decoupling its long-term value from the daily grind of hash rates, and moving towards a massive asset holding strategy that the market is only just beginning to properly value. This 6.84% move today isn't random noise. It represents a clash between the weary sentiment of the past year, where the stock was battered down to 52-week lows near 9.71 USD, and a sudden realization by institutional capital that the company is trading at a massive discount to the sum of its parts. If you are sitting there with your Fidelity mobile app open, watching the volume spike, you might be wondering if this is a squeeze or a genuine reversal. The general belief is that post-halving, miners are in a do-or-die phase where margins are compressed to near zero. The dead miner thesis has been the dominant narrative, suppressing the stock price for months. However, the contrarian take, and the one that seems to be driving this specific price action, is that Mara has successfully pivoted. They are no longer just a miner, they are an energy harvester and a Bitcoin treasury vehicle. By holding on to their mined Bitcoin, the HODL strategy, and expanding into AI compute and gas-fired power generation with partners like MPLX, they are building a moat that pure-play miners simply cannot replicate. When you analyze the intraday action, you see that the buying pressure isn't just coming from retail traders chasing a pump. The order flow suggests accumulation. We are seeing sustained bid support at the 11.50 USD level, acting as a launch pad for this push toward 12.00 USD. If you look at the Interactive Brokers trading data or check the depth of market on the Interactive Brokers platform, the bid-ask spread is tightening and large block orders are hitting the tape. This indicates that someone with deep pockets believes the bottom is in. It is a classic setup where the smart capital enters while the fearful capital is still hesitant. For individual investors trying to invest online, this creates a tension. You want to wait for confirmation, but by the time you get it, the asset has already moved 10% or 20%. The fear of missing out battles with the fear of catching a falling knife. But Mara today is showing us that the knife might have hit the floor. Let's look at the broader context of why this is happening now. We're in late November 2025. The crypto markets have matured. The initial hype cycles have settled into structural adoption. In this environment, a company like Mara Holdings, which recently rebranded from Marathon Digital to emphasize its broader scope, is being reevaluated. They're not just plugging in ASICs anymore. They are managing a massive portfolio of energy assets and digital currency. This is where the Schwab Intelligent Portfolios and other automated investment help algorithms might start flagging Mara not just as a speculative tech stock, but as a proxy for digital asset infrastructure. It is a subtle shift, but a powerful one. When you utilize investing sites to screen for value, Mara's price-to-earnings ratio and price-to-book value are starting to look incredibly dislocated from its growth potential, especially when you factor in the value of the Bitcoin sitting on their balance sheet. Speaking of balance sheets, we need to talk about the sheer scale of what Mara holds. This is the holdings part of their name. Unlike competitors who sell every coin they mine to pay the electric bill, Mara leverages its capital markets access to keep the Bitcoin. This effectively turns the stock into a leveraged Bitcoin ETF with an operating business attached. For a user on Robinhood stock trading, buying Mara is often easier and more tax-efficient than managing a cold wallet. The Robinhood app interface makes it simple to click buy, but it doesn't always tell you what you're buying. You're buying a piece of a company that is betting the farm on the long-term appreciation of digital assets. If Bitcoin goes to six figures, Mara's treasury alone could justify a stock price double or triple where we are today. That is the leverage effect. Of course, this works both ways, which brings us back to the risk profile, but we will get to that later. The trading volume today is particularly telling. It's tracking above the average 30-day volume, which is a key indicator of conviction. When price moves up on low volume, it is a trap. When price moves up on high volume, like we are seeing now, it is a statement. Traders using Fidelity investments or managing their Fidelity IRA may be reallocating. We are seeing a sector-wide rotation where capital is moving out of overvalued software plays and into hard asset tech plays. Companies that own physical infrastructure, power generation, and commodities. Mara sits right at the intersection of all three. They own the compute, they have the access to power, and they hold the Bitcoin. This trifecta is becoming increasingly attractive as global macro uncertainty persists. Consider the energy angle. The partnership with MPLX to develop power generation in West Texas is a massive deal that hasn't been fully priced in. By using stranded natural gas to power their operations, Mara drives their cost per coin down significantly. In a world where energy prices are volatile, having a vertically integrated power stack is a massive competitive advantage. It shields them from grid pricing spikes that can wipe out a standard miner's profit margin in a single afternoon. If you are doing your own self-investing, you need to look for these kinds of structural advantages. It is not enough to just look at the line on the chart. You have to ask, who pays less for electricity? In mining, the low-cost producer wins. Mara is positioning itself to be that low-cost producer regardless of where the spot price of Bitcoin goes in the short term. Now, I want to pause for a second and ask you to weigh in. This strategy of holding Bitcoin rather than selling it is controversial. Comment below how many shares of Mara you currently hold, or if you think their HODL strategy is genius or reckless. It is a debate that splits the community, and I want to hear your take. Back to the analysis. We also have to consider the AI pivot. You might have heard whispers on this on SoFi Stocks forums or SoFi Active Investing discussions. Mara is transitioning some of its capacity towards high-performance computing for artificial intelligence. This is the new gold rush. Bitcoin mining uses specific chips, ASICs, but the infrastructure, the cooling, the power, the security is exactly what AI data centers need. By diversifying into AI compute, Mara diversifies their revenue stream. Instead of being 100% dependent on Bitcoin block rewards, they can earn steady cash flow from renting out compute power to AI companies. This changes the valuation multiple. AI infrastructure stocks trade at 20x, 30x, or 50x earnings. Miners trade at 5x or 10x. If Mara can convince the market it's an AI play, the stock price re-rating could be explosive. This is the hidden catalyst that today's buyers might be sniffing out. Let's look at the institutional landscape. Fidelity brokerage data and 13F filings often show us who is entering the room. We know that major asset managers have been dipping their toes into the crypto equity space. They prefer stocks like Mara over direct crypto because it fits their compliance mandates. It's a registered security, it trades on the Nasdaq, it has a board of directors. For a Fidelity wealth management client, this is a safe way to get dangerous exposure. The fact that Mara is liquid, with millions of shares traded daily, makes it a prime vehicle for these large funds. They can enter and exit without crashing the price, usually. Today's price action suggests they are entering. Comparing Mara to its peers is also instructive. You have other miners like Riot Platforms or CleanSpark. They have their own strengths, but Mara's sheer size and treasury distinguish it. It's the heavyweight in the ring. When the sector runs, the heavyweight usually attracts the most liquidity. It's the flight of quality within a risky sector. Even if you are just starting to invest online, you tend to gravitate toward the names you know. Mara has that brand recognition. It's the stock that shows up in the headlines. This reflexivity matters. Attention drives volume, volume drives price. It is a feedback loop that Mara has mastered. However, we must address the risks. Reality is rarely a straight line